Welcome to The Explainer. Today, we're putting cybersecurity giant Fortinet through the ringer, using the legendary Peter Lynch's framework. We've got their complete 2025 financials, and we're going to dig in to find out what's really going on with this stock.
Okay, so here's how we're going to break this down. First, we'll categorize the company. Then, we'll lay out the bull case, what's to love. We'll look at their path to success, what has to go right. Then, of course, the bear case, what could go wrong. And we'll wrap it all up with a final verdict. Let's get to it.
All right, first up, categorization. This is, step one in any Peter Lynch analysis, and it's absolutely crucial. So where does a company like Fortinet actually fit in today's market?
So check this out. For the full year 2025, their revenue hit $6.8 billion. That's up 14% from the year before. And that number, that 14%, puts them in a really fascinating gray area, kind of caught between two of Lynch's big categories.
And this really gets right to the heart of it. See, for a long time, Fortinet was a classic fast grower. We're talking those exciting companies that are growing at 20% plus. But now, at 14% growth, boom, they've landed squarely in the Stalwart category. And this isn't just a label, it's a fundamental shift. We're now looking at a more mature, established company, and that changes everything about how you value it and what you can expect from it.
So, with that in mind, let's build the bull case. What's the story here? Why should you even be interested in a stalwart like Fortinet based on the 2025 performance?
First thing you got to look at, and maybe the most powerful part of the story, is the cash. I mean, Fortinet is an absolute cash flow machine. They generated over $2.2 billion in free cash flow last year. That kind of money gives them a ton of options. They can buy other companies, pour it into R&D, or just give it back to shareholders. It's a huge advantage.
Okay, second point. Yes, the overall growth rate is slowing down. We've established that. But they are absolutely crushing it in the areas that matter most for the future. Just look at this, a 40% explosion in what they call Unified SASE billings. Now, SASE might sound like a bunch of tech jargon, but trust me, it is the future of cybersecurity. And this number shows Fortinet is a major, major player.
So what the heck is SASE? The simplest way to think about it is this. In the old days, you'd buy one box for your network and another box for your security. SASE smashes those two things together into a single service delivered from the cloud. It's simpler, it's more efficient, and for Fortinet, it's a genius move that gets customers hooked on their whole ecosystem.
And one last thing for the bull case. Do not sleep on their AI game. We're talking over 500 patents either issued or pending, all related to AI. This isn't just some marketing buzzword for them. This is real tech that's powering actual products like FortiSCM and giving them a serious leg up on the competition.
Okay, so the bull case is pretty strong. But what has to actually happen for this investment to work out? What are the key things we need to see from them?
Well, management has laid out a pretty clear three-step plan. Number one, win the convergence war. That just means continuing to dominate that sweet spot where networking and security come together. Number two, expand what they call the security fabric. Just think of it like a net that pulls all of their different products together, making the whole system stronger. And number three, reward shareholders, plain and simple.
And when they say reward shareholders, they are not kidding around. They have a massive $10.25 billion buyback program authorized. And they've still got about $1.4 billion left in the tank to go out and buy their own stock. That's a pretty nice safety net for investors.
Okay, but you can't just look at the good stuff. Peter Lynch was famous for saying you have to understand the risks. So let's flip the coin and look at the bear case. And what's interesting here is a lot of these warnings come directly from management themselves.
So management has put a huge number out there. They've said something like 650,000 of their firewall units are basically going to expire by the end of 2026. Now, on one hand, that's a massive sales opportunity, right? But on the other hand, it's a huge risk. If the economy gets choppy, what's the first thing businesses do? They delay big, expensive hardware upgrades, and that could be a major problem for Fortinet.
And here it is, in black and white, straight from their own guidance. The numbers don't lie. After putting up 14% growth, they are now guiding for something less than 12% next year. This isn't some analyst guess. This is the company telling you, hey, things are slowing down. It really hammers home that transition to a stalwart.
But if you dig a little deeper, you find what might be the most worrying part of the story. It's not just that overall revenue is slowing down. It's their services revenue. See, this is the good stuff. The high-margin, predictable, recurring revenue that investors absolutely love. And they're guiding for that growth to get cut almost in half. That is a huge red flag for the company's long-term profit engine.
All right, time to put it all on the scale. We've got the bull case, all about cash flow and smart strategy, and we've got the bear case, which is all about a clear slowdown and some big risks. Let's weigh it all out.
First off, let's just get this out of the way. This is an elite operation, no doubt about it. For 6 years running, they have crushed something called the Rule of 45. All that means is you take their growth rate, you add their profit margin, and if it's over 45, you're looking at a top-tier company. To do that for 6 years straight, that's just incredibly impressive.
So this really is the classic investor's dilemma, isn't it? On one hand, the reward is owning a best-in-class company that just prints cash and is dominating in crucial new markets like SaaS. But on the other hand, the risk is you're paying for a company whose growth is clearly decelerating and is facing a tricky hardware cycle that really depends on the economy holding up.
Which leaves us right here with the final question. You have an absolutely world-class company, no one can deny that. But it's also a company that's clearly maturing and slowing down. So the question you have to decide for yourself is the reward of owning this high-quality business worth the risk of that slowing growth?
That's our full breakdown of Fortinet. Thanks for tuning in to this explainer, and we'll catch you on the next one.